Hello and welcome. You're tuned into CNBC TV18 Prime. Let's get cracking on a brand new edition of the Big C. I'm Manisha Gupta and with me is Nigel Dsouza, back with your daily dose of commodities, currencies and cryptos. We'll take stock of the action unfolding in the currency space with global as well as global dynamics shifting at breakneck speed almost every single day. And we'll do that with a whole host of experts lined up next half an hour. We'll be joined by Sumedha Dasgupta of Economist Intelligence Unit and Saktiandi Supaat of Maybank. Stay tuned.
Well, before we go ahead with the action, today is a very, very special Big C because we have Manisha Gupta who's celebrating her birthday today. Manisha, from the entire team of Big C, a very, very happy birthday. God bless.
You.
May you shine like gold, whatever, all the adjectives.
Glitter like diamond.
Absolutely.
Hit record highs like crude and Bitcoin.
Absolutely.
I'm just doing commodities and
be the
cryptos.
strongest currency ever. Thanks a lot, Manisha, for all the support over the years. And the entire team of Big C is wishing you an absolute cracker today and for the remaining of the year.
Nigel, I appreciate that. Thank you so much.
All right, that said, let's focus on the equity markets. Investors continue piling onto risk-on assets, spurring both the S&P 500 and the Nasdaq onto fresh record highs. The street seems to be shrugging off concerns around the recent tariff developments, including a 50% tariff on copper imports and a 50% tariff on Brazilian imports. So all in all, it was a solid session on Thursday. However, the story is a little bit different when it comes to stock futures. They are edging lower after US President Donald Trump unveiled a 35% tariff on Canada starting August 1st. Major averages are now poised to close the week little changed, with the Dow hovering around the flat line on a weekly basis. The S&P and the Nasdaq, they're higher by less than 1% or thereabouts. Well, let's tell you what's going on in Asia Pacific. Well, stocks are largely muted on that front.
In the meanwhile, the prices of crude oil declined 2% overnight as investors weighed on the potential impact from the Trump's tariffs on global economic growth. A key trigger for, of course, was the OPEC trimming its global demand forecast over the next 4 years. According to OPEC, world demand will average at around 105 million barrels per day this year. And it expects demand to grow to average 106.3 million barrels per day in 2026 and then climb to 111.6 million barrels per day in 2029. Remember, these forecasts for 2026 through 2029 are all lower than what the OPEC said in the previous year.
Well, shifting focus to the money markets then, where the dollar index is poised to close the week with gains of nearly 1%, with signs that the street is taking Trump's tariff salvo in their stride, except, of course, for the Brazilian currency, where he threatened a 50% levy, sending the currency into a tumble out there.
And you have to keep an eye on copper because that continues on an uptrend. The COMEX copper has scaled a new record high. This after Trump confirmed a 50% tariff on imports starting 1st of August. The announcement has spurred U.S. copper premium over the LME benchmark to a record 25%. This indicates that traders anticipate a tighter U.S. supplies as the flow of copper into the country slows following the months of aggressive stockpiling ahead of the tariff decision. With the U.S. importing nearly half of its copper needs, mainly from China, market participants now expect domestic supply to tighten further. Lending the prices support on a year-to-date basis. If you look at the LME copper prices, they have gained up almost a modest 12%, while the U.S. copper prices are up a whopping 40% there.
Well, the action doesn't stop there, though. Trump's policies and bullish bets push flagship cryptocurrency asset Bitcoin to yet another record peak. Guess what? Yesterday when we were talking about it, it was around 112,000. Today it's at around $118,000, an over 6% move just in the last 24 hours. In fact, the Bitcoin has shot up 26% just this year, all thanks to strong institutional demand and more corporate adoption. What's also providing a bit of a leg up is US President Trump's supportive policy stance. The Trump media and tech group has filed with the SEC to launch a crypto ETF. Attention continues to be centered on digital assets ahead of the crypto week in the United States. That's starting July 14th. Meanwhile, over $1.1 billion worth shorts have been wiped out, marking the biggest liquidation this year. And yesterday we had a couple of guests who suggested that maybe by the end of Trump's tenure, it could be possibly closer around $280,000 to around $300,000.
Wow. You know, as you said, just said, Nigel, that Bitcoin has gained up by 25% in this year until now. If you look at the last 12 months, we're up by 105% already. So if you go by that, and, you know, as you just said, the kind of shots that have been wiped off, 101.13 billion, that tells you that not too many people were expecting the Bitcoin prices to rally. So most of the people were in short, and these short liquidation is what has led to the prices going higher. So clearly,
well, interesting point, Manisha. You know, and it's that sort of an asset where you have to be ready that it can pull back 20, 30, 40, 50, 80%.
it's a 24/7 market.
Indeed, indeed. And, you know, so it's not one for those who are faint-hearted. You need to be a little bit brave out there and ride it, you know, because we've seen in the past even a 70% pullback in the currency. But from there, it rallies and, in fact, you know, makes up all of those losses. So let's see how this goes.
Oh, absolutely. Up 25% in 6 months, up 105% in last 12 months is how Bitcoin has been. But as promised, let's put the focus back on currencies and economies. Sumedha Dasgupta is senior analyst, Economist Intelligence, and she joins us now. Sumedha, since we have you with us and Bitcoin really is making headlines, what is your own sense on this?
Thank you so much for having me on. Well, my sense is just that don't bet your month's salary on this because tomorrow you may not have it. So it technically is that for all digital currencies. But yeah, I'm not an expert on that. So that's just my 2 cents.
But Sumedha, the way the US markets really seem to be leading this, would you say that economists and analysts perhaps will have to start looking at it just by the sheer pressure?
Certainly, definitely. This is like what you say is the future, basically. So certainly we'll have to up our game and we'll need to figure out how to kind of get ahead of the cryptocurrency, which is right now ahead of us. Definitely, this is going to be a very important factor for markets to factor in the years ahead. I feel that.
All right. Hi, Sumedha. Good to see you, Ben. What about how do you see Trump's tariffs, you know, impacting the global economics? Because one would have thought that he's gone a little bit quiet. Then he's been pushing deadlines. And just when you expect him to cool down a little bit and, you know, have a more logical Trump speaking, suddenly there's another tariff that's imposed. What's your base case in terms of tariffs on the globe in comparison to what it was prior to Trump?
Well, I think expecting the US president to be logical is a little bit too much. So definitely
some rationality will do.
Well, certainly. We all hope that, but well, we keep getting disappointed. But yes, in all honestness, definitely we've also had an expectation that he is going to kind of extend the pause on tariffs. But of course, this extension, which is only for about 3 weeks, and, you know, tariffs are coming back in some form or the other from 1st of August, is a little bit disappointing. Also, he is focusing a lot on sectoral tariffs, so not a lot of sectoral reprieves can be expected unless there is significant traction on trade agreements that come through. So far as we know, only UK and Vietnam have actually managed to strike some sort of a deal, a very mini form deal and bare bones ones, but nonetheless a deal. So I think we can just expect a lot of gyrations to happen in the weeks ahead, in the months ahead. He is going to use as much rhetoric as actual action to enforce what he wants or what he thinks is the apt way that countries should play the game. So we should be prepared for that. And definitely markets will react in retaliation to that and as a reflection of just the terrible uncertainty that has engulfed the globe right now.
Sumedha, I was attending an event yesterday and there was this conversation on a lighter note where people talked about BC and AD. So BC, Nigel, is before COVID and AD is after Donald.
Nice one.
That is, you know, in these last 4 and 5 years, Sumedha, the world really has changed a lot. Earlier we spoke about, oh, it's not a normal year because it's COVID year. And then we talked about, oh, it's revenge buying. And then we talked about, oh, this is geopolitical tensions coming in. And then it has been about tariffs. What is a base case scenario right now and what is normalcy according to you?
Well, I think we should just be prepared for uncertainty. That is the new normalcy. And we should know that these kind of things are going to keep coming. We are not going to be able to rely on US policy as kind of a steer as we have in past years. We should be prepared for all sorts of commentary that comes through from there, targeting developing nations, developed ones alike. So it's basically how you play the game, how the nations can sort of make some sort of headway in their discussions with the US government. The US government also suffers from issues like limited staffing at this point of time. So obviously, there's a lot of competing claims on their time. And you can expect that a lot of these trade talks are going to be prolonged. There's going to be rhetoric regarding, say, things like BRICS that comes through from the US president from time to time to keep countries on their toes. But yes, I think the only new normal right now is uncertainty, as we've seen from 20th Jan when the new president came into the US. And we should be prepared for 4 years of that in general.
All right. Earlier, Sumedha, we used to talk about BRICS and ASEAN and the likes. And suddenly, in fact, we are faced with not just AD and BC, but also TACO, MAGA, whatnot. But, how are you reading the US economy, though? Because you're getting very diverse signs out of there. Some data points indicate that maybe, in fact, the job market is pretty okay. Well, there are signs of softening in various other data points. In consumption, some of those retail sales numbers as well have been cooling off. And, some of those sales out there, the response hasn't been as great. So your reading of the US economy?
Well, I think my reading is very similar to what right now the Federal Reserve is doing, which is one of general confusion of where the economy is going. But I think one thing which can be said for certain is that the US economy is going to see a certain slowdown, possibly technical recession to subsequent quarters of contraction. These kind of things are going to be the real thing for the US this year, as well as how sort of the tariff game plays out also means that they could be in for a little more prolonged pain in the next year, the year, 2 years ahead also. So certainly it's going to be a situation of cramming of inventories, front loading of trade. These are the kind of trends that we are seeing at this point of time, which is also keeping global trade sort of uplifted right now. But there is an end point to this. There will be an inflection point. And as a result, from then on, the US will potentially see higher costs, higher prices, hits to its economy and hiring, these kind of things, which is when we will get clearer indication of the fact that definitely the US economy is slowing.
Sumedha, closer home then, how do you look at the Asian markets? Because until a couple of years back, it was all about Asian growth that everybody spoke about. Now, China has slowed down. India still seems to be shining bright. How would you look at Asia?
I think Asia is still a significant bright spot. I would definitely say it's one of the, I think, brightest spots regionally at this point of time. Asian growth will remain supported. It's got a few major players who are still going to continue to do well. So let's say ASEAN as a bloc, India itself, of course. China is certainly slowing, but we have to remember that the appeal of China's supply chains is still tremendous. So there is no other country which can sort of capture that immediately or, match China's power at this point of time. So Asia is going to remain a bright spot. Markets are, of course, intermittently going to react to volatility related to either tariffs or any other news that comes out, geopolitical or otherwise, from the US. But generally, Asian growth has a lot of policy backstops, which are important. The central banks, the governments are doing all that they can. So this is going to be a growing market, a growing region, somewhere where I think businesses are going to find safer bets than they will, say, in other more developed countries and regions, especially the US. So I see it actually as thriving in the years ahead. Yes.
All right. Sumedha, what kind of figures are you working with? The RBI, they have done their bit. So monetary policy seems to have given that much needed push. Now we'll have to see whether or not we get some other kind of stimulus coming in from the government. That's waited by. But otherwise, how do you read the Indian economy? Do you think there's a risk to the growth estimates of around 6.5% for this year, very, very roughly? And also, inflation actually has cooled off considerably. What kind of RBI action you're expecting for the remainder of this year?
So actually, my growth forecast is a little bit lower. I expect it to be around 6.2% for fiscal year 26, sorry. And if we don't strike a trade deal with the US, then potentially that number is going to come down to around 6%. But as far as monetary policy is concerned, I think the RBI has done significant heavy lifting in front loading their rate cuts. So that's a very important thing as far as transmission is also concerned, as well as the CRR cut. These are very important liquidity infusion measures that the RBI has taken. So I do expect potentially one more rate cut in August. That is my baseline case. But of course, risk to that view is quite high, especially because the RBI seems to feel that it's achieved sort of the real rate that it wishes to. Inflation cooling obviously makes the RBI's job much simpler if they do want to do one more rate cut. But again, this will be early August, and before that, by the end of July, we will have some more clarity on things like the US-India trade deal, if it does come through, or at least what level of progress we can expect. That will potentially guide the RBI's decision in the next policy meeting.
All right, Sumedha, thank you so much for joining in and sharing all that analysis with us in sense of tariffs and, of course, economies where Asia does start to look or continue to look on the positive side there. Appreciate your time and look forward to meeting you yet again. With that, it's time for a short breather on the show, but Saktiandi Supaat of Maybank will be joining us on the other side. Stay tuned. Welcome back, and Saktiandi Supaat, Head of Forex Research, Maybank, now joins us on the show to understand the action unfolding, of course, in the money markets and the impact from tariffs therein. Saktiandi, hi, thank you so much for joining in. It's a difficult day. Every day is very, very different as we see those letters continue to come out of US with higher tariffs, really. Your first reaction on this, were you anticipating these kind of higher numbers?
Yeah, so we are anticipating sort of markets volatility within this new Trump administration sort of is expected, but we didn't. I mean, in terms of his comments on to the media about the recent broad tariffs about 10 to 20%, and the recent copper tariffs adds on to those volatility. So I think it's not unexpected, but the element of surprise for some of these moves on or announcements on the tariffs from President Trump definitely adds to the volatility.
Hi, Saktiandi. Good to see you in. Thanks a lot for joining in. Well, what do you make of the dollar index? We have had a couple of big events in the recent past. Whether you talk about the geopolitical situation that played out. Now you have Trump peppering the market with his tariffs, but the dollar index refuses to pop up. In a normal case, you would have seen some geopolitical issue, you would have seen the dollar strengthen a little bit. Now you have that brief move from around 97 to 98.5 odd, and then it cools off yet again. Is the best of the dollar behind, and where do you see the dollar index headed?
So yeah, our view for the dollar, we do see still pockets of dollar sort of support coming in, as what we saw from Trump's comments. It creates concerns about growth and the impact on some of the his tariff announcements and possibility on growth and how it will affect sort of trade numbers going forward. And that has led to dollar sort of being move up quite a bit. But in general, after that, I think the sort of retreat or retracement in the dollar is a function of a few things. In our view, I think in the slightly longer to medium term view, even within the short term view as well, that we think the dollar exceptionalism has sort of faded a bit. Second is, I think in terms of the twin deficits that the US has, will continue to weigh on them. My sense is also there's still expectations of a Fed easing coming on stream, which leads to some concerns that I think dollar would continue to soften towards the end of the year, which is our view. We still expect dollar to eventually soften by another 2 to 3% by the end of this year. Not the 10-15% that people are expecting, but generally a softer, milder dollar softness. And I think euro strengthening is actually one of the beneficiaries of the dollar softness, and that has panned out.
Oh, well, absolutely, yes. We've seen euro gain up quite a bit. Are you also in a camp which believes that euro is heading to 1.20?
I'm around there. I'm familiar that I think some are actually expecting towards 125, but I'm around that 118 to 120 sort of camp rather than the too extreme. So that's why the 2 to 3% dollar sort of softness view rather than the 5 to 10 or more % dollar view or dollar weakness view.
Saktiandi, with the way we've seen tariffs being increased and the implementation now, the date is 1st of August. What is it that you're calculating or factoring in sense of impact for many of these economies? Or would you say that the world will learn to live excluding US? We've seen a lot of countries start talking to each other now. How is the world that you see post 1st of August?
I think the world will need to learn to live with this US tariff volatility. I think I'm aware that I think even some companies are looking at dealing with supply chain issues from a dollar perspective, or from a US perspective, and another one with a non-US perspective. I think some companies are starting to work around that. So policies and currency movements will also have to deal with how policies react to those developments domestically and I think globally. What's key is I think we need to first have a strong understanding of how the US economy would evolve from both growth and inflation and how the Fed will move, but also growth outside of the US. If the growth outside the US starts to tank or starts to drop dramatically because of these tariffs impositions down the road, it could definitely lead to a stronger dollar. But the question is, if the rest of the world starts continue to strengthen or at the very least move in a better momentum compared to the US, I think the dollar softness will continue on track, and I think the rest of the world would still be somewhat supported, and you will continue to see dollar index not appreciate as what we expected it. I mean, what people would actually expect the dollar to move during those periods.
Saktiandi, what about Trump's attacks on Powell? The fear is he could probably appoint a shadow Fed chair, though the term ends in May 2026. If that is the case, that could send the dollar index into another spiral. What is your reading of the situation?
So if you look at the data, the period where he actually sort of questioned or suggested that led to a sort of the initial steep decline in the dollar index, which led to some concerns on the dollar assets, and the independence of the Fed actually led to some concerns from then onwards. So I think the sort of suggestion is that once you appoint a shadow, it makes whoever the chair is a bit of a dud in some aspects. So the question is whether that will intensify going forward. My sense is I think there will be some risk of that, which will so this is definitely one of the factors that will weigh on the dollar going forward, in my view, on top of other things, on top of the Fed easing. But like you mentioned earlier in the earlier session, indicators like jobless claims and jobs numbers does seem to indicate that it is not so easy to infer a sort of an economic situation where it is going to be softer in the US as yet. So it's numbers, the economic macro numbers seems to be quite mixed at the moment. But the question is, our view is I think it will probably be on the softer side of things.
Saktiandi, we seem to be really overwhelmed with tariffs right now, but there is geopolitics to attend to as well. And at this point in time, would you say economies are looking at it as a very regionalized impact and not impacting various economies? Is that how you're reading it as well?
I think for now, what we're looking is that the front-loading activities of some of the countries and some of the blocs because of these tariffs, they're front-loading it ahead of the tariffs. But as you can see, Trump is rolling it over to August and September, and from initial July. So some of this front-loading could still pan out positively for some of the Asian countries, for example, in the third quarter, instead of instead of actually affecting growth. So you could essentially still have a third quarter positive figures to some extent. So my sense is I think we need to play around these durations of this rolling over of some of these tariffs, a bit of front loading. Domestically, some of these countries are actually doing some fiscal, for example, China's fiscal sort of stimulus to help the economy, and of course some measures to help the property going forward would be positive, would be good if we can see that. So I think as long as China keeps a gradual controlled currency path, I think Asian currencies will be kept stable to some extent, and not see a CNY weakness going forward. And you can see that in the fixing of the renminbi, which is broke 215 for today.
All right, Saktiandi, thanks a lot for joining in. Looking forward to chatting up with you in the time to come. But for the time being, we appreciate you joining in and giving us your view on how the global space is shaping up, and in particular, the currency space. Well, on that note, though, we'll have a wrap up on this edition of Big C. More news and updates coming up on the other side.